The Foschini Group has a price-earnings ratio of 19, a dividend yield of 3.6% and a market cap of 33.4 billion rand. Foschini consists of 14 trading branches, selling lifestyle products that range from fashion, jewelry, accessories, cosmetics, cell phones, homeware and more. Foschini trades in over 1,700 stores and manufactures 70%, that's 70% rather, of all its products locally. So this gives new meaning to that term successorize that you brought in, even successorize on your home front.
Yeah, this is an interesting model, a very good company. Recovered from a bit of a slump a couple of years ago, but it's really firing on all cylinders now. It's got the multi-store strategy. So you can be in a particular mall, the one where we are in Melrose Arch. It looks like a bunch of different stores, but really what it is, it's one manager looking after a series of their stores that range from due south to, you know, Foschini's and then the American Swiss and all the other stuff that's there, as you say. And
sounds as though you spend a lot of time in that Melrose Arch.
Every day. So the thing is, that model I think will work well, although globally you know that the big retail chains dominate. So it's like, you know, for sporting goods you've got one, or you've got Tiffany's, or you've got Walmart selling everything. So I'm not quite sure, but as far as South Africa goes, that and the credit-driven model appears to be where it's at.
Do you spend as much time as Paul in Melrose Arch?
Probably not. I'm more a Sandton boy myself.
You like the model though?
No, I do like the model. I think Foschini is very, very good. They are aggressively targeting sales at the moment. So they've already said on their credit front they're willing to let sort of bad debts increase a little bit to really drive sales growth. And I mean that's why we're seeing a lot higher like earnings per share forecasts on it. Also, I mean looking at you know their cash card program, very, very good. You know, where I think about 60% of their customers have a sort of accounts, or maybe you've got one, I don't know.
I think Paul's definitely got one. Where is it? Come, bring it out. Let's see your Foschini card store.
Credit, I mean, really.
But
it's a cash card.
No,
it's a cash card.
Cash card, exactly. So they now can track the other 40% of their customers. They can track that, sort of gain information on them, and then also the reward program is very, very clever. So all the other little stores, you sort of get vouchers saying, oh, why don't you try this? Why don't you try that?
Sounds as though you do spend a lot of time in Melrose Arch.
It's a great cross-selling opportunity.
Now tell us what rewards they get. Come with your in-depth knowledge of this territory.
No idea. I'm sure you get like, you know, 70 Rand off if you go and use your card, or you can have 150 bucks if you spend more than X or Y or Z. But look, I mean, share price-wise, you could have picked this thing up at 29 Rand a share back here in the crisis, and look at this, here it is, you know, touching all-time highs. But this is the thing, I think it's going higher, because they're going to continue to roll this out. And I love the way that they've got different brands for different layers of the market, but all of them have got an integrated
Share now,
business.
are your clients exposed? Because you're very positive about the story. We just want to know where your interests lie.
No, we don't. In fact, we've got a couple of clients who own it, but it's not one of our core recommended stocks in the retail environment, no.
Is your retail expert saying that this is one of the core holdings in the retail space that you should have?
Yeah, looking at it, I mean, we would probably rank them in terms of Woolworths first, Foschini second. But looking at it, I mean, you know, there's always the danger with the retail sector because of the foreign buying that in any long-term portfolio to build a sizable position, and then if things turn south and foreign money pulls out, it's going to be a race for the door, and these can collapse quickly. So short-term, yes, the clients are punting on it, but longer-term portfolios not all.
Let's talk about that risk for a moment. How significant will it be for our retailers if foreigners pull out?
By which you mean people that live here going home, or you mean shareholders deciding to sell
their
their
foreign shareholders deciding to sell their
No, what are they going to do? What else are they going to buy? They've got to come to countries like these and buy quality companies. I want to put something else on the table, if you'll excuse the interruption. Sports goods. I mean, Foschini's got Total Sports and Sports Scene, which I think are very exciting brands. The reason being that sports apparel is increasingly becoming attractive to younger people as an alternative to luxury branded goods. So instead of looking all tarty, you rather go for, you know, sporting attire.
And we know that you like Nike, so does Sports Scene sell the appropriate brands?
All of that stuff.
That's where you spend most of your time then?
That's it.
All right, so hot or not on Foschini, Gary?
Definitely, I would say short-term punt, definitely hot.
And
yeah,
Paul?
I like it.
You like it, a hot, a double hot we've got on Foschini.